Good morning and good afternoon, traders, wherever you may be. Welcome to the F.A.C.E show. It is I, Ryan, just steering the ship first part of the show. Blake's off on Ninja Trader. So we've got a wonderful guest later on that he'll be interviewing, Melody Wright, who's absolutely, excuse my language, shit hot in the housing market. So that's going to be a great interview later. Welcome to you all. It's been another long week. Here it is at Friday. Don't forget, as I like to say, Friday's pips are beer pips. Don't go blowing your week just on a Friday afternoon. As it's Friday, I want to kick off. I want to know what your favourite cocktails are. I've been piling into the mojito since New Year's Eve. I've got to say that was my drink of choice, and I've kept that going over the various weekends. So let me know what your favourite cocktails are. Okay. You must like a cocktail 8.
Morning, Ryan. Morning, everybody. Thank God it is Friday indeed. Yeah, I do like the hot cocktail. But you were saying you were on the mojito since New Year's Eve. I remember you being on the mojitos since the summer 2024, mate.
Oh, my dirty little secret is out.
Yeah, I mean when we came to see the air show, it was already mojitos all around.
I remember that. Yeah, fantastic afternoon that was. Yeah, no, I am partial to a mojito, though I haven't had any for a while. Hence why I kicked them off again on New Year's. But yeah, oh, look at that. So you talk about booze and everyone's coming in with their cocktails. Look at that. Paul, Espresso Martini, a Carver for Ingmar, Grey Goose for Michael, Purple Rain for Simon. Very apt, very apt. Good stuff. We've also got Greg on board. Good morning, good afternoon, Gregor. What's your favourite cocktail, mate? Snowballs?
Well, I like beer,
Yes,
but I know which I don't like. It's Bloody Mary.
Okay. So it's easier to rule out the ones you don't like than the ones you do like.
Yeah.
That's a wonderful philosophy to have, mate. Right. Okay, let's get going. Just before I'm going to bring in Greg, he's going to look at some charts in a moment. But first off, just want to make you aware, if you're not already, that we've got a sale on our trader funding program, as you can see from the screenshot there, which I will disappear in a moment. I'll chuck the old linky dink in the Zoom chat for you if you want to take advantage of that. 30% off all our trading funding program accounts, whether that's assessment or instant funding accounts. So that will run out at midnight on Sunday. So if you don't take advantage of that now, it'll be gone. And yes, George, Trump finally got his Nobel Peace Prize. Oh, that's Stennis' wife speaking to me now. Yeah, Trump got his Nobel Peace Prize. He can add it to his FIFA Peace Prize and everything else that he seems to be picking up. So he got given that by the opposition, the Venezuelan opposition leader, Mercado. So, he's a happy bunny. That'll be sitting on his golden toilet right next to the flusher, as K-Man pointed out earlier. Right, what's been going on? I suppose the main news has not been too much happening in the European hours. The main news has been that we've had a further pickup, shall we say, or more jaw boning. Let me bring the chart down from Japanese officials, which has put yen pairs a little bit further on the back foot. We haven't been managed to make any new highs this week after that high up in the 159.50s in dollar yen. But just looking around the crosses, you can see we've just had a little bit of easing. Now, we were discussing this on the Flow show. The rhetoric is still there. It's still verbal jaw boning. Experience tells us that has a limited impact. And if it's not backed up by any actions, then the market's going to start calling their bluff, and we'll probably see the yen weakening once again. So that's just a bit of risk to keep an eye on. Even though we've seen a bit of easing in some of these yen pairs, the intervention risk is still there. But as I said, be ready and cautious that all this jaw boning will have an expiry date on it as far as the market is concerned. Kay, what else from Japan? We had a bit of politics as well.
Yeah, the new party created by the CDP and Komeito, the CRA. Bit of reform in there, as they say. They want to call for fiscal discipline, but we know how far that can go in Japan, which is about 5 minutes, 7 minutes, maybe I give them, because nobody can really stick to fiscal discipline in a moment where Japan is still in its fight to get its head and keep its head above water. So I doubt that the Japanese voter is really going to massively vote for that new party. It does contain heavyweights, Noda, etc., are in there, but as we can see from the 2024, end of 2025 elections, um, together, Komeito and CDP, they could not reach a majority either if you take the rough numbers, and I doubt they will this time. Seeing Takaichi's popularity level, it's going to be a tough fight for them to beat her.
Yeah, and the other thing we perhaps need to highlight as well is that the exchange rate is cropping up in politics now as well. You know, this opposition party saying, or Noda saying that you know, weak yen it has a big negative impact on the population. The Bank of Japan have got it in their statements, and you know, sources pieces talking about it. We're obviously in a weakening phase and got the verbal intervention. The yen, could it become one of, well, I wouldn't say one of the main, but an important role in the political campaigning to come?
Yeah, I think it will. And it's also been brought up because so far the Bank of Japan has been speaking about the potential impact of the weakening yen on inflation, which is real, of course, if the yen weakens 10%, like it kind of did over the past months. It will have an impact on inflation. But yesterday in that report, they also spoke about it having a potential impact on growth, and that's adding a piece to that puzzle. And yeah, the politics are for sure going to talk about it. And as you said this morning on the Flow Show, would it be possible that Katayama, who is part of the current government crew, feels the need to intervene and tell the people don't vote for the opposition because we are taking care of the yen?
Yeah, absolutely. So yeah, I wonder if they use it as a bit of a political tool. But
Yeah,
we
but
shall.
therefore we should see a continued weakening because, as I also said, historically speaking, they do not tend to come in when the currency is already, and it's very mild right now. We're still at lofty levels, but it's already grabbing a little bit back of what it's lost. But it's marginal right now, so we're still not out of intervention territory because they just talk about it virtually every day. Yeah, I mean, we're still there. The next, if it ticks up another 100 points, the alert will even be bigger.
Yeah, absolutely. And I think we're going to have to keep a close eye on the yen today and see how it closes out. If we have got a bit of nervousness, we could see a bit of profit taking, or you know, squaring up into the weekend, just in case there's any intervention early Sunday night. Gregor, you always keep a close eye on the yen. I don't know if you just want to grab the charts quickly, give us your view on what's going on at the moment. I'll just stop sharing and so let you take it. But yeah, what's your view on the yen and what's happening over there at the moment? Have we finished going up, or is this just a bit of a pause?
Well, I certainly think that. Can you see the screen?
Yep, got it, mate.
Since I mean, my main concern is that after that push to above, that was from a year-old high from 2025 in January, we just couldn't stay up there for a long, right? And now if this week we finish now, because it's Friday here around 58 or even lower, I would see this as a failure breakout and would probably see more weakness going into the next week, maybe back into this triangle range. So my assumption is that it could be time to look for some retracements. Of course, we are just now testing some key intraday supports here, but as I said, if today we get a little bit lower and close below 158, then I think that lower supports will be retested. That's one thing. The next thing is that moves, let me zoom this, that moves that come out of a triangle are usually final in higher degree Elliott wave impulsive sequence. So that's another thing which tells me that maybe that was the final piece of that impulsive advance, at least from that September lows, I would say. So another thing why I think we should be aware of potential more weakness, even if I go to the smaller time frame charts here, we had a very beautiful 5 waves down from that most recent highs. And whenever we see 5 waves down from a new important high, that's the most important structure that we can get to confirm that at least temporary top is in place. And when I make some downward projections, usually I will focus on minimum projection, meaning wave C that equals to wave A, and that's target of around 157.52. So if we go into that area maybe today, I just think that then doors could open for much lower prices going into the next week. Maybe even some weekly candlesticks. Let me check if I have this here. Give me a second. So you can see this candlestick currently. It's obviously it's not finished yet, but it's definitely very, very bearish, I would say, going into the next week if we close here, or as I said, maybe even lower at the lows. So dollar yen, maybe bearish near term, or neutral, definitely not bullish up here as long as we have this latest high in place. Also, what could have impact on dollar yen? I mean, dollar index also came nicely to the upside. We are at the 61.8% here. Testing this December 09 swing high. We have another important level around 99.60 as well. But again, this whole move up from basically from Christmas low is still looking very overlapping here. So I cannot count this in 5 waves very clearly without overlaps like this decline. So I think that maybe even this one is yet to turn to the downside, and I would keep a close eye on the euro dollar. If we look on the euro dollar here, it looks like that could be moving into some very important support levels for a triangle. So again, this flows from basically from the start of the year. I just still think that this market could change, reverse at least some portion of these flows, and we will see some rebound. Keep an eye on this channel. If we can break it, I just think that more upside would follow. Also,
okay. If I could just interject, there's an interesting actually discussion since yesterday also going on in our chat room for the people who are not with us, and there are quite a few people looking to potentially trade that side if the euro can come somewhere into those mid 115s, low 115s. People may be looking at trading exactly that, the bottom end of either a channel or a range, and for as long as it stays above that low that we saw like earlier in November, above there, people are looking at that for kind of a point of no return and putting stops below there, that could be an interesting trade to do for the weeks moving forward.
Yeah, I mean, I certainly agree. I just think that this level is definitely important right here, as you said. And as long as we are trading above that level, I think that there could be a turn higher. And of course, we can retest easily this lower trend line first. Now, when it comes to potential ideas, at least from my side, I mean, I would have much more conviction that we have completed this downward move, once we will have a daily, maybe even a weekly close out of this downward channel. So I'm waiting on this to happen. As long we are trading above that level, I think that's possible. Maybe we'll get only a temporary rebound here and nothing significant, but I still think that market will not break down that easily. I mean, we still have stocks that are in uptrend here. I realize that this could be obviously some very important wedge formation, but with the most recent rebound from the mid of the week, I just think that these highs will be retested here, and then it's yet to be discovered if prices will stay bullish or maybe we'll see a new failure break and a turn down next week. But what I see so far, yeah.
I was going to ask you about stocks because, you know, we're in the midst of earnings season again. Yes, there's been some breakouts depending on which you're looking at, but, you know, relatively so far, you know, the earnings have been pretty good. We're not seeing S&Ps cracking onto new highs, whereas prime earnings, you know, it didn't need much of an excuse to crack on. Do you see that potentially that we're not moving on to new highs in the S&P and maybe pausing in some of the others? It's a bit of a worry. You know, you look at the Dow and whatever.
Yeah, I mean, what could be worry? I mean, if you look just a second. I mean, banks are something to maybe to worry about. If we just maybe we'll see any kind of a higher degree pause there, maybe even S&P 500 would come to the downside. I mean, in general, when looking here, Bank of America, notice that we have seen a pretty nasty reversal. Recently, we broke this wedge, so it looks like that some of these stocks could really be on the pause, and maybe it's another story why even if the S&P 500 would move to a new high, it's not necessarily that that we will see any kind of a strong stock market in the next few weeks. So I would be watching these stocks that are bearish, what will happen with them, and I certainly think that that's something that could also then have an impact, even if there's not tick by tick obviously correlations, that there's also something that would have consider maybe on the S&P 500 as well. And as you said, what if maybe we'll not see a new high? Well, I would dare to say that if we see a weekly close, because Fridays we know can be very volatile, and if we suddenly break this low of 6,000, what was that, 890, and finish the week there, the Friday there, then we can usually expect that sharp flows that are seen on Friday can continue also into Monday trading. But I'm not sure. Do we have any holiday on Monday?
Have we got Martin?
I think so.
King Day coming up?
Yeah,
Yeah,
it's Martin Luther King there.
Yeah, so maybe that's something that we should consider. I mean, maybe there will be some non-price action as a holiday reversal when the market usually slows down, pulls back ahead of these days. So maybe that's something also to watch. So maybe if we see really some sell-off today, then market could be easily sideways here till maybe even Wednesday.
Yeah, it's quite interesting you mentioned the banking sector, because that's under a bit of cosh from various things, namely this credit card cap that they're trying to push through.
Or for the 10%, right?
Yeah. And I think I don't want to get into the political things, but I think it was Bank of America got named in the Epstein stuff as well. So they, you know, you showed Bank of America a minute ago. They may be caught up in that, might be affecting the price as well. But yeah, there's certainly some external aspects that are affecting bank stocks at the moment. But another thing I wanted to ask you, Gregor, because I know you look at this as well. Oil, you know, we've seen this uplift this week or the last week or so in oil prices, but then we've had this pullback being attributed to Trump, you know, easing off the threat pedal over Iran. Is this going to spoil the rally we've been seeing, or
I mean,
again, is this just?
I'm so neutral and so don't have real bias on crude oil because it's just simply driven. Any kind of real move is driven by Trump, it seems, and he's so unpredictable. And with all of this Greenlandia and Iran situation, that you really I have no clue what I can expect or where the prices could open on Monday. So when it comes to Friday and crude oil, you just better stay aside and wait on the new trading week, and maybe then it will be much easier to find the real direction or navigate these markets here. But when it comes to my views in Elliott wave terms, I would rather maybe stick to some higher degree time frame chart. And I would dare to say that we could be just chopping around for this year here between this, let's say 52 maybe and $70. So this would be some kind of a consolidation before eventually at some point we go even lower. But with all this situation that is really not clear from geopolitical perspective, I just think that it's not easy to pick the right side on energy at this point, because they're threat for escalation, but on the other hand, you have Trump who wants to lower oil prices. So
yeah, there's multiple factors in this one. Okay, mate, you got anything else you want to show us?
Maybe only pound, since I know that both of you came in as well.
Both of us hate it
a lot. Yeah, I mean, for this the start of this year, for the first few months, 2 months, what I would be paying attention on, as I also posted this on X, is this level. That was the lower CPI figures back released in December, lower than expected. Then a day later, we had Bank of rate decision. They cut the rates back then. The market still moved to the upside. So I'm seeing this as a very important swing lows, because clearly we just moved straight higher since then. And I think that if market can pull back to this area, there could be some interesting liquidation pool in this zone where possibly we may try to complete this counter trend movement. So to me, it's even more important, these kind of levels, when you have key events that put the lows in, especially if I can connect the dots here with the Elliott wave principle itself. I mean, even if that would not be a real event, it will be very important support level around here based on this ABC projection. But now when I look back and know what was the reason for this spike low, it makes it even more important at these levels here. So I will be watching closely for potential rebounding from that area, but obviously still room for some move lower first here.
Yeah. Well, as both me and Kay are short the quid, I hope you're wrong. Okay. I know we've got some of our 1 minute chart watchers in the Zoom chat. Gold is plunging. It's come off $10, $20. Do you want to grab the charts?
Yeah, why not? The question really is what's going to happen in the weekend or after the weekend. There is a bit of hopium to where Trump seems to be wanting to wait, but the question really is it a tactical pause that he commented upon, saying that apparently there's not going to be more death or no people going to get the death penalty or whatever. It could still be a tactical comment just to get the citizens out of there. And even though there is some cautious optimism there, which is dragging gold lower, which is dragging the metals lower, because we know that they're a bit of an anti-risk trade, right? The long metals. Although I would argue that silver has different forces pushing and pulling, but gold especially. So the question now is how does the risk market want to go into the weekend? We can see a bit of a deeper pullback, perhaps if there is enough hopium. But then, as we have seen from the Venezuelan situation, it can change on a flash. I mean, if or when they will know that there's enough US citizens being safe, etc., it's still not ruled out that US goes into Iran, right? So the thing is, I, I think we could see, and it can go deeper, and I think even 45.5 is not especially a huge move, but as you say, the 1 minute chart watchers will say, oh, this is a break of the trend line. Now oil is going to collapse. I really think we need to reserve our definite answer for Monday. And what I would like to do is to just warn people, because there could be some gaps opening on Monday, depending on how the situation will have evolved. Whether there's nothing going on, whether the situation really, and I'm talking about on an international level, the geopolitical level. I'm not talking about local level on the ground or something like internal. But I'm talking about the wider geopolitical situation. If nothing happens, it could be that we are actually trading a little bit lower again. Oil may also then cool down a little bit, perhaps, but we have seen those two, oil and gold, move a little bit separate. But I would argue that there is an argument to make, if you will only look at the Iranian situation, that oil and gold, for instance, would could run a bit in tandem right now, or have a better correlation for the few days to come. So yeah,
Just
RJP,
quickly,
the market may be closed, but I'm not sure that the Brent market is probably going to be open. You know, on for oil, for instance, and I'm not sure that that the gold futures, CFDs. Somebody actually enlightened me. I don't think the market will be completely closed, will it? We still have trading ongoing on Monday, but I may be wrong there. But anyway,
yeah, we'll have Globex, I think.
yeah, the CME may be closed, but then on the rest ones.
Yeah, I'm just
Yeah.
while we're looking at gold, and we're seeing this move lower. There's been a bit of a spike up in yields. I'm just keeping an eye on tens. They're trading back up to the 419s. I don't.
Yeah,
So this looks like, and it's happened pretty much the same time as gold has gone. So I'm wondering if maybe there's a risk headline that's popped up somewhere.
there's potentially a bit of correlation, and then especially, yeah, there's potentially a bit of correlation. The problem is the correlation between yields and gold has completely blown up over the past year and a half, and I would still say it's a bit of a coincidental correlation. Yeah, they may be running a little bit together because somebody has something to do, but I would rather say that for the immediate, yes, there is maybe something going on there, but I really think it depends on how the risk players, and I'm not talking about as the retailers. I'm talking about the real players, how the risk players will want to go into the weekend. So I'm saying there is a possibility that we could see a little bit lower if there's enough hopium, and the positions are a bit longish still. But then we will see how we come out of the weekend. Silver is actually pulling back quite a bit again right now. I'm just going to try and put that on to the better scale. I think the first zone here, okay, 87.60, but that hasn't stopped anything. But we'll be here in the low 86s, because that is, since we had the break of that level, that is where the buyers have shown up 4 times. So we had a bit of a correction here, and it stopped. We had just a quick tick above, but it stopped again. Here we hit it and we stopped. That's your first real level to watch. It's coming down quite rapidly, actually. It's already back in the 87s, but that's going to be, I think, the intraday level that we need to monitor. And then there's a bit more going on around 84. But again, there's several forces in play there, especially I would argue in silver, where we could see a different bit of a playbook than we have seen actually already in gold over the past sessions. So silver, I still think it's going to find probably bids around that zone unless something really happens and there's peace all around the globe, which for the time being is very doubtful. Anything else that I should be looking at, Ryan, before we hand over to Blake?
Yeah, well, I was gonna bring up the subject that we were talking about on the flow show. I might just grab the screen if that's all right.
Yeah, absolutely, mate.
Let's grab that.
Back over to you.
Yeah, can you see that all right?
Yeah, got it.
Yeah. So we have got quite a significant amount of expiries going on today. If you're in our platform, you'll get this on a dashboard in the market info tab. So particularly in euro dollar, we've got a whole stack pretty much all the way from 116, 115, 90s and below all the way up through 117s. So we've got a lot going on here. Now, I know a lot of you guys and girls, look at options, or if there's a big one, it's going to magnet the price and the price is going to move there. Sometimes when you get a huge amount like this, it can be a bit counterintuitive because which one are you going to magnet to if the price is going to do that? So it can have the effect of, cancelling each other out. We have got low volatility at the moment in euro dollar. What's the range? It's extended since the flow show by 6 pips to 22 pips from 16, 17 odd. So we've got low vol. So you can tend to see the price stuck around some of these expiries. But Kay, with this volatility, how do traders change how they're going to trade around it when you've got such low vol? What do you need to do?
I think we need to wait for the ranges to pan out. With low vol, we know that there's more interest faster. When we get, for instance, yesterday dollar was looking pretty good, broken sub 116.10, but then we stopped at the next hurdle 115.95, just because there is just too much in there, and that gets confirmed by the picture that you're showing there right now, with a lot of expiries in there today. Probably the hedgers have already been at work yesterday there to hedge that stuff. Usually, I'm going to say that if I see one or two expiries, even 2-3 billion in euro dollar doesn't matter. But if you see a whole host of them that like we have right now, concentrated within 50-60 pips, what I would do and what I probably will do is wait for 3 p.m., which is 10 a.m. New York, actually, to be precise. 10 a.m. New York is expiry time. To wait for expiry to wave over, and then probably we can see perhaps a bit of real interest come back into the market, because this kind of bunch of orders, when it's low vol in the market, it's not something we're going to fight, right? Unless we get an explosive headline one way or the other.
Yeah, absolutely, mate. And I see Blake's here, but just before I bring him in, just want to show you that what's happening in yields at the moment. So this looks like we might be getting a bit of a risk move somehow, because this yield moving up should, if it's things moving normally, should be taking the dollar with it, but it's not. So just keep an eye on what's going on in this one. Again, this 420 level, it's been an absolute monster, both sides of the trade. Whichever side you are, it's either holding it one way or another. So if we do break up through there, we'll have to see which way the dollar wants to take it. Good morning, Mr. Blake. Melody is in the house.
She is. We brought her over. We already brought her over as a panelist. How you guys doing? Good morning.
Yeah, well, good, mate. How are you?
Good. Kind of a quiet wrap up to the week after kind of a messy week in the market. So I'm excited to have like a real estate conversation with Melody. This is going to be awesome. And I've got actually a lot of questions for her. But before we go over to Melody, I wanted to talk to you guys really quick. We're seeing a little bit of a reversal in the emerging market space. We got the rand, the peso. They're at their lows of the session, where we have the dollar at their highs against the two, especially after having such a melt up in those emerging market currencies the last couple of days. Was this like a last gasp higher in these emerging market currencies? What do you guys say about that?
No, I really don't know what exactly happened yesterday. I think there's been a pretty decent flow going on in Mexican peso, for instance. I don't know whether it's like remittances also all of a sudden hitting, but I'm not sure whether the music is over. I think we are going to, as I was saying earlier in the show, we are ahead of a weekend, ahead of a longish weekend, your side of the planet as well. I'm not going to say it's over, but we could just be in for a bit of a quiet one and just managing the books. I think it's going to be interesting, Blake, to watch exactly what's happening again, because yesterday it was pretty clear the timing of the move, and then I'm especially talking about that MEX move yesterday. It seemed to have been a fixing move, right? The last hour, the train really accelerated to the top side for Mexican peso, downside for all the pairs against Mexican peso. So I would say keep an eye on that same time slot, and we will see whether it's completely over or whether there's more waiting to be done.
Yeah, okay, and that makes a lot of sense because of everything that we've seen. I mean, whether you have the S&P at 7,000, you have Bitcoin nudging up against 100 grand, and then now maybe a possible move, a reversal in these emerging market currencies. It's gonna be a really interesting Friday. So, hey, Ryan, K-Man, thank you guys for holding down the face fort today while I was over on Ninja Trader Live. I hope you guys have a great weekend. And make sure everybody listening here, you catch that flow show early in the morning. I always listen to them first thing in the morning when I get up, so I can get up to speed on what's happening in the markets. So thank you very much, guys. And Greg, I'm going to go back and listen to the recording to hear your Elliott wave analysis on all the markets.
Thanks, Blake. Have a great interview, man.
Yeah,
thank you. Melody Wright, how are you, my friend?
I'm good. How are you doing?
I'm doing great. And, we've talked before. I've had an opportunity to interview you before, and I'm really excited to have you here because the real estate market is it's an interesting one, and I think we're in a much different market than we've been in years past. I do live in Arizona. I live in Scottsdale, Arizona. So I'm in one of those weird real estate markets. When it's hot, it's hot. When it's not, it's not. And it is much different than, the rest of the United States. But you have a unique perspective because you drive around, you're like more of a boots on the ground person, looking at different real estate markets, what's happening in the Midwest, what's happening in the Northeast, what's happening out West here where I live. Give us before I just unleash a massive amount of questions on you, give us your overall view on how you're viewing the real estate market today.
Yeah, today. So, it's been frozen, Blake, as we know, for really the last couple of years, almost 3 years. We just had the lowest, slightly lower existing home sales last year than we did the prior year, which was the lowest sales since 1995. And we've increased population by over 20%. So this market has been completely frozen. Redfin's come out and said there's way more sellers than buyers. Zillow has come out and said, while we're not seeing home price declines from a sales price perspective, we are seeing reductions in those estimates, on 53% of their listings, and the average is around 9.7%, price reduction. And so, what's happened is you've had a lot of people that can wait. Basically, they listed in the spring and summer. They didn't get the prices they want. They delisted. And so you're going to have a lot of inventory in the spring. Over on the new home side, we just got September and October results. So we've been flying in the dark there. But what we can see is their sales are okay, not great. But those price reductions are significant. They are reporting prices below $400,000. Something else that's happened just recently is the median list price. So that's the price that people list their homes on these listing sites, Blake, is under $400K for the first time since 2022 and is year over year negative. But we're not seeing that in the headline numbers right now. Go ahead.
No, so I understand that the transactions are slow, right? I get that. And I want to ask, have you done any work in what you do about, our market versus different markets. For example, I'm a product of the 80s. I'm in my 50s. I'm in my mid 50s. I remember my father he was trying to sell his home in the mid 80s. And it took forever. The house is on the market forever. And it feels like we're in a similar market. Prices didn't really move a whole lot. People would just list their home, then they, list it for a few months, wouldn't sell, they take it off the market, put it back on. And it seems like to me, we have a very similar market in that respect. Would you agree with that?
Absolutely. Yeah.
Okay.
And yeah. My family lost our home to foreclosure in the 80s during that kind of inflation cycle. And so, but yeah, it's absolutely frozen. But I think what we just saw with December results, although I don't want to get fooled again, because we had a very similar move last year in December that suddenly we had a lot stronger sales, which I was hoping that would continue throughout the year so we could get actual price discovery. Because what's happening right now, Blake, is that it's really, there's only two people transacting in the market. It's one, your top 1%. A lot of them have pulled back as well. And we'll say the top 10%, but really that's pulled back. And then those that are being brought in through the, what I'll call government subprime, that's really reached its limit too. So I think what you saw in 2025 is motivation, because all these Airbnb bros, long-term rental, the institutional investors, they were all offloading properties. And so they were motivated. That motivation started turning to distress last year. And we're going to see that distress continue through 2026, especially with the guardrails on that on that FHA mortgage program. Delinquency is on the rise.
It's on the rise. And, I know so many people, again, I live in Arizona. I'm like one of those weird people that
it's an alternative universe there in Arizona.
It is. And they're like, hey, what do you do for a living? I'm like, I'm in the currency market, and their eyes start to go wobbly. But because everybody else is in the real estate.
Oh, I know.
Yeah. They're all in real estate, developers or whatever. But so many people that I know that have Airbnbs, they're also in really good financial health. They have, let's just call it 6-7 figure IRAs. They've ridden the baby boom rallies, so to speak. They may have another property that they'll hold for a while because they bottom it. When rates were rock bottom, they refinance when rates are rock bottom. But they don't really. They're not feeling the pressure, at least not yet. Now that's just again, this is what I'm seeing from my little bubble.
Right.
But that isn't the case, I'm sure, across the United States. But more importantly is how close do you think the jobs market is related to all this? Because, these are also people that work, executive type of jobs. Those jobs for now are very, are secure. But if they lose their job, or if we start to see a little bit of movement in the labor force and we start to see maybe job loss, that could accelerate things, I would think. But right now, the U.S. economy seems on fairly solid footing, at least. So, so what do you say about how about if the U.S. economy just continues to coast? I know there's a lot of doom and gloomers out there, but let's just say it. We just can continue to grow at a moderate pace.
So we can continue at where we are now. I think what's happened is a lot of the layoffs that we saw in the fall have not flowed through kind of the system, I would say. And we, very high numbers of layoffs last year. So that's going to have an impact. But really, Blake, what I said when I started on this journey was that you didn't need necessarily a recession. What's happened is that property taxes and insurance, replacement costs, electricity bills are such that the consumer just continues to get under, stress. Whereas the cohort that you're talking about that have those nice jobs, they're going to be last to the market. But I think that what you're seeing right now, Blake, is it's kind of the bottom of the K is in real distress. The top of the K is really pulling back. And I think those layoffs are going to impact the middle of the K. And so, we can go along just like this, and we're going to still see home price declines because of the affordability issue. And you'll have people that'll say affordability has improved somewhat, but it has not improved nearly enough to really get this housing market started again.
Okay, so that brings me to this question that Michael Weissman just asked about corporate buyers and the BlackRocks of the world, which own like half of my town pretty much. What happens if the Trump administration really can push which by the way, I think I've always said to my wife, to my friends, I'm like, you ever want to see the real estate market stop? Like, if corporations cannot invest in a single family homes, that is going to stop price rises, in homes pretty quickly. And lo and behold, this is what is being floated around. What happens to the real estate market should, corporations be prohibited from investing in a single family homes? What are your thoughts here about the whole big picture on that?
Yeah. So, here's the thing. Those institutionals were invited in by Fannie Mae, Freddie Mac at the end of the last crisis to keep those home prices from declining even more, and well as to kind of, get past that foreclosure tsunami. They came in, they bought them up. But here's the thing. Oh, yeah. I mean, at the invitation of the government. This is what everybody needs to understand. But you are in a very special bubble because across the United States, they own less than 2% of all the single family homes. So mom and pops own a ton more, but where they own in a big way matters. And what you're seeing where they own in a big way is that most of them have been net sellers since 2022, Blake. And if they if they were doing any buying, they were doing all in the family buying where they could sell to one another, support a certain price so that they could go out, because all those assets are pledged to some sort of lending facility, right? And if the value's reduced, then they get in trouble. And so I was in the room with a very well-known large institutional in September. And what they said is that as soon as leases are up, they're rehabbing, they're selling. In these markets where there's a lot of them, like San Antonio and Atlanta, you're already seeing year-over-year price declines. And in fact, in certain areas of Phoenix, you're already seeing year-over-year price declines. And so they really have not been in the market at scale since 2022. In fact, I see this very differently than most. Phase one is this ban of saying you can't buy anymore. They're not really buying, Blake. But I see this as a setup for an institutional bailout because ultimately what's going to happen is what this gentleman said to me is they can't find price. They've been chasing price because there's just those estimates are in no way reality when you actually try and go to sell. And so by sort of saying, well, you guys can't buy anymore, I think what's next or phase two is going to be like, hey, if you sell us these at a certain price floor, we'll kind of use those in an affordable housing program. And there's two bills in committee right now with very similar programs or something like that. Not specifically to the institutionals at the moment, but I think you're going to see both the institutionals and the builders kind of bailed out through affordable housing initiative. So this is kind of the thing, Blake. They floated this before the election. It was very popular, but net at this point in the cycle, it's not going to be, it's not going to have a huge impact. But to your point, the biggest impact it could possibly have are to those mom and pops who understand that those corporates have been next to them buying, and if they're not buying, then that means who is going to be the one that comes in to buy those homes, especially as you're seeing home price deceleration, because a lot of this, Blake, you say they have cushy jobs and things like that, but a lot of them took out leverage. And so, that changes the whole game.
Yeah, sure. Okay. Well, I've got something that I really want to ask of you. I know some of our viewers want to hear about certain pockets of the market. Sure. But we talk about affordability, and I have nieces and nephews. They're all in their 20s and 30s, and a couple of them lucky enough to buy homes when they're early on when rates were low. A lot of them are kind of left out in the cold right now. I think we all understand that it's a supply issue. But tell us about 50-year mortgages. I mean, 50-year. I mean, I'm gonna take out a 50-year mortgage. I ain't making it, so. Why don't I take out a 50-year mortgage? Because I'm not gonna fulfill that. But how does that look to the real estate market, and how does that help affordability, or is that a disaster in the making?
There's a reason they're abandoning that initiative. It's just a non-starter. And we already have 40-year modifications. If you look at the amortization schedule, by year 11, you've paid $275,000 in interest, which is really where our median house, price should be. Probably even lower. But, I believe the supply narrative is a narrative. And in fact, yes, do we not have affordable homes priced right now? But we have plenty of housing units in your area right now. There was a big article in the Wall Street Journal about rent concessions that are being offered because we've overbuilt in multifamily, and we've overbuilt in single family, especially in your area. So that supply narrative, I believe, is people will look back historically and say that was completely false. And if you just look at population to housing units over time, we have plenty of supply. It's just not priced correctly.
So, I remember, I always reference back to the GFC, and I think about all my friends that are in the San Diego area. And I remember, housing's so freaking expensive in San Diego. It's ridiculous, right? You're definitely paying for that sunshine tax over there. But I remember they were taking all these apartment buildings, and they were converting them into actual individual apartments. $1 million
shoe boxes.
Yeah, $1 million
what we
shoe
call
boxes.
Them. Yeah.
But do you see that as a possibility for getting making things more affordable in different parts of the country? I mean, going that route, because there is a lot of I don't know about the rest of the country. You're the one that's driven around everywhere. There's a lot of apartments being thrown up, at least here where I live.
Yeah. And as well as there's a lot of built for rent, which if you travel that perimeter in your area, you will see a ton of. And so, sure, they could possibly do, one thing that I thought about when I was on the road, Blake, is what are we going to do with all this empty housing? Because when you go on the road, it's a very different picture from the aggregate numbers that we get. Sure. And maybe they'll be turned into senior living, complexes or something like that, because that is something, the silver tsunami is something that we are going to have to deal with. But San Diego is interesting because I was out there last year, and honestly, what happened there is the Airbnb bros descended on that place. And it looks like, when you look at just kind of the dots on a map of how many there are, it looks like a disease infestation. And we're already seeing year-over-year price declines there. And so I think that while people thought San Diego was untouchable, you're going to see a lot of trouble and disorder in those markets. It has changed so drastically. So, Blake, I think that's the biggest thing, is that we have a memory of how things were 10 years ago. And if you haven't been out there recently, I have to tell you that this country has changed significantly.
Yeah, and okay, so I got a couple more questions I really want to ask you. Michael Weissman was asking about any thoughts on Long Island, and then Lucas was asking about Florida,
Jacksonville,
the Florida area, and I believe he was asking about. Let me just make sure I got that correct. I needed to see the question. Jacksonville, Florida market area. Any thoughts on those two particular areas?
Sure. So Long Island, that's everybody sort of says, well, I can't buy anything here. But what you're starting to see there is you are actually starting to see some inventory grow. You're also seeing an effect. I've talked to several people who can't sell their homes there. They'll be at the end of a transaction, and suddenly the buyer backs out because they can't get credit. The purchase rejections, the mortgage refinance rejections are at the historical highs right now. And so Long Island also has a demographic issue. There's a lot of landlording that goes on there. So it's going to be the Northeast is the last holdout, I believe, but they're only 13% of the market. So for perspective, I think there's a ton of misunderstanding about what inventory is out there, as well as kind of the demographic situation, which, I think you're going to continue to see out migration from the North in general. as that silver tsunami continues, we see the effects of that. But they're going to hold out a little bit longer. And it depends on what you're looking for. If you're looking for what everybody's looking for, you're going to have a problem. But if you're looking for, maybe just that super starter home, much smaller, you might be in better shape. Or if you're looking for luxury, those markets are getting killed. And so, I think you would have opportunity there. But if you're looking for that, what we call the 3-2, that is where the most competition is going to be. So I say, hold on. But they still, even though they can't build the way that they can build in the Sun Belt, demographics are not on their side, as well as that landlord class are mostly boomers. And as they age out, that's going to have a massive impact.
And how about Jacksonville?
Jacksonville is in trouble. I mean, it's in a ton of trouble. You're seeing it right now. I have a good colleague down there that owns a brokerage. We are starting to see those prices just really come down, and there is so much inventory there, Blake. And so while it's a very nice area, and people like it, there is a lot of trouble ahead for Jacksonville because they have completely overbuilt there.
All right. Well, there are obviously hotter markets than others. I mean, you take a lot of people coming out of California. They're moving to Tennessee, which
That's right.
Absolutely love. It seems like a lot of people are going out. My son goes to he goes to Ole Miss, and a lot of people moving out to Mississippi, buying they get a pretty big bang for their buck depending on where they're going.
Whole plantation.
Yeah, absolutely. And there's going to be obviously hot markets. There's going to be cool markets. I know overall you feel that prices are going to come down, but what parts of the country do you think are going to fare better than the other?
Yeah. So, I think there will always be certain areas that do okay, but Blake, I don't believe any market is going to be immune. I think what we're missing is that demographic story. And so where you think everybody is rich, everybody's going to be just fine. I think people are going to be surprised by those areas as well. And so I have to be honest with you, Westchester County just went year-over-year negative. I didn't expect that this soon. So I don't know right now. I think the winners are going to be the South is going long term after we get over this oversupply issue. Like you say, a lot of people are moving to Tennessee. I was born in Mississippi, believe it or not, which is why I could complete that song the other day when we were on the same show. So, it's hard to say. It depends on where that industry develops. I mean, we have to be where the jobs are. And
Right.
so I think that the South will ultimately be stronger, and the Northeast, unless they figure out a way to attract people besides, and this isn't a political statement. This is just the reality. Our population increases were because of immigration last year, especially in the North, and they've just been losing people, as has California. And so it's really hard to say at this moment who's going to really win out.
Yeah, that's another interesting. I mean, you've made a lot of references to the silver tsunami. I mean, we are going to be faced with the demographic, problems, as other countries have been in the past. Whether you're talking about Japan or China, and here we are in the U.S. I know plenty of youngsters, my nieces and nephews included, that are waiting to have kids. Some of them are choosing not to have kids, and they're called dinks. The dual income, no kids. That's actually a thing. That's like that's a trend that's very, very well developed right now in the United States, which is from a population growth is something that we do have to take into consideration. Melody, when we look at these real estate trends, and I know right now near term you feel that that prices may come down, and my opinion towards that is, when they do, make sure you're in a position cash wise to take advantage of lower prices whenever they come. But but it also has to do with rates, right? Right now, rates are steady above 6%, close to 6%. Here we got a new Federal Reserve chairman coming in. Whether it's Hassett or Warsh or whoever Donald Trump tries to pick, and whoever gets the nod, they're probably going to try to cut rates. But we've seen it in the past, as rates have come down, mortgage rates have actually, have gone up. Do you see mortgage rates coming down towards, 5%, 4.5% ever? Or is that just kind of like a, wishful thinking?
We might be able to get to 4.5, Blake, but I don't believe we'll get lower. As whoever was speaking when I joined, that 10-year has just been stubborn, very, very stubborn. And so, what they're doing right now is having Fannie and Freddie buy mortgage-backed securities to tighten the spread. And it has brought some relief in mortgage rates. We're just at the low point that we actually saw in 24. We just finally got there after % going out and saying, we're getting that 10-year down. We couldn't do it. And so I don't think so. Realtor just came out, realtor.com, saying that we would need 2.65% interest rates to really, change the affordability game. I just don't see us getting there in the near term. I think we'd have to be at some disaster, and I mean a real disaster, to get below that 4.5. So, and once you're in disaster, does it really matter? Yeah, I don't know. All signs point to we're not going below those levels, but of course there could be some sort of exogenous event that could change it. But the bond market seems pretty stubborn right now.
It sure does. And so, mortgage rates tend to follow the 10-year, right? 10-year yield. So I guess we'll be keep a really close eye on the 10-year yield moving forward. Melody, this has been a really a fascinating conversation. I was really excited for today's interview, just because I'm, obviously in a real estate sensitive market, and everybody I know knows in real estate. So it's great to get your point of view. Any last minute thoughts before we and I'm gonna take over the screen so everybody can make sure they follow you. Let me just grab this so everybody can see your profile on X. Here's Melody M3_Melody. That she's a great follow on Twitter. I've been following her for a long time. Melody, any last minute thoughts on real estate that you wanted to make sure you got across today to our viewers and people that are watching the recording?
Yeah, so I would just stay frosty is what I would say. We are in a transition right now. And as that delinquency continues to rise because of the issues in the FHA program, as well as the layoffs that we saw last year as they flow through the system, be very cautious when you're out there buying. Make sure that you have reserves if you're using leverage. And honestly, I would not recommend using leverage right now as we're making this transition. The spring is going to be very interesting and will give a true indication of where we're going. And Blake, I think it's going to be fairly disorderly in a lot of markets. And so, and as you say, watch the 10-year. But right now, as a buyer, you need to be very cautious. As a seller, if you think you're going to sell in the next year, list that property as soon as possible and get an independent appraisal.
And do you feel long-term real estate is still a place that people want to be from a, whether it's a long-term investment, a place that you want to, buy a home and sit in it, for grow old in a home. Do you still think, having a home is a good place to have your money?
I believe that, having a home is as shelter, as a place to raise your family is a great use of your money. But housing as casino, housing as investment, as defined even in the CPI, I think that once that silver tsunami gets really started, that's not going to make sense anymore.
All right. Well, Melody, I want to say thank you so much for being here. Like I said, it was fascinating conversation. I really appreciate you being here, and make sure you guys all follow Melody. Make sure you give her a thumbs up, subscribe to our channel if you're not subscribed. And Melody, I'm going to reach back out to you here in the next couple months and hopefully you back. Yeah, I'll get you back on here and get caught up and hopefully we've seen a little bit of dislodging of our markets.
Correct. I hope so too. Thank you, Blake. And anytime. Thanks so much.
Have a great Friday. And thank you so much for being here. And folks, thank you so much for all listening in. I appreciate you. For those of you that are Forex Analytics subscribers, I'll see you on the Morning Edge in about 10 minutes.